Hello and welcome to Internet Capital Markets, the weekly show where we explore how financial systems are being rebuilt on the web. Each week, we sit down with the builders, investors, and institutional leaders shaping this transformation, from tokenized assets to decentralized finance, data, and everything in between. Today's show is brought to you by TrustBytes, Smart Treasury for Internet Capital Markets. Today, we are digging deep into the data topic and having a guest from the beautiful country of France, now currently based in New York. So before that, let me first welcome my co-host and co-founder Jonas, as we are builders ourselves. Welcome, Jonas.
Welcome, welcome. Yeah, and today we are really excited to have another company or the CEO of another French company on the show with Ambre. She's the CEO of Kaiko. And yeah, first of all, welcome. And Ambre basically spearheaded the transformation of Kaiko into the leading institutional grade provider for market data, analytics, and indices for crypto, tokenized assets. And she has a broad background in finance, also in math. But yeah, welcome to the show. And for all of the people out there who are not familiar with you, maybe you can dive into the details a little bit here, introduce yourself, and tell us a little bit more about Kaiko. And is it fair to say that Kaiko is maybe the equivalent of Bloomberg in the crypto space?
We work with Bloomberg. I'll explain a bit more, but
Good.
so my name is Ambre. Thank you very much for having me on the show. I'm happy to be here and talk about data and capital markets. So quick background. I come from the world of traditional finance. I was an equity derivative structurer for about 10 years for HSBC in London before I left about 10 years ago for Kaiko. And Kaiko is the leading global financial information service providers for crypto assets, doing everything from market data to analytics to regulated benchmark rates and indices, powering the institutional needs for clean market data on crypto assets. We are also working with those same financial institutions on building data infrastructure around tokenized assets and servicing market data for financial applications related to tokenized assets.
Thousands of questions here, but maybe let's start with the origin story here and let's dive a little bit deeper into that. So how did the idea actually came up? And also, I've read that another very famous French founder, the CEO of Ledger, actually was one of the co-founders of Kaiko, right? So how did that evolve?
So yes, this is the origin story of Kaiko. I was working in equity derivatives at HSBC when Kaiko was originally created by Pascal. Personally, I was very, very interested in how blockchain and smart contracts could represent an underlying infrastructure for capital markets to run workflow execution in a disintermediated way. I was working in, as I mentioned, equity derivatives, and I never really believed in the narrative that we would ever replace banks. I think we need banks to structure deals, to provide balance sheets, to issue financial contracts on the primary market. However, where I saw an opportunity was more in the execution of a financial contract once it had been issued. So everything that had to do with the secondary life cycle of a financial contract, whether it's coupon payments, whether it's monitoring margin calls, everything that had to do with the ongoing life of a financial instrument could be actually done in a more disintermediated way. And that is where I saw the opportunity for capital markets and blockchains intersecting. Now, if you believe in a world that is going to be increasingly on-chain, I think here we all believe that this is the case, it's important to realize that the value you give to data that is being fed into the smart contract or the financial contract becomes increasingly critical today in financial markets, data is a very critical part because it serves as a reference point, right? But then once you get that reference point, you have middle office and back office and a bunch of intermediaries that are going to triple check all the calculations and kind of move the workflow to the next phase. If you think that we're going to leverage smart contract-like technology to execute workflow in a disintermediated fashion, it means that the data that you input into the smart contract actually triggers the execution. And this is very powerful because it means that data becomes very, very critical. So when I met Pascal, that was back in 2014, he had just started Kaiko. I was very much interested in blockchain. And then in 2016, which was 2 years later, I left HSBC and I was very interested in the overlap of capital markets, blockchain, and data. And I reached out to Pascal, and at that time, he was offered to join Ledger as president, and he decided to go to Ledger, and then I moved into Kaiko, and I acquired a controlling stake in Kaiko and have been running it since. So that's the origin story and kind of the vision underlying that. And now why we started with crypto market data is that 10 years ago there was no capital markets on chain. That was not even a trend yet. And so what I did is really focus Kaiko to be a provider of market data solutions to the more institutional B2B segment of the cryptocurrency industry, so that we would become their trusted data partner for everything that had to do with data and crypto, knowing that when tokenization and the infrastructure narrative will become more of a topic for those institutions, we will be already in the conversation and we will have built a kind of trusted relationship, which is exactly what has been playing out over the past 2 years now.
All right, that's super interesting from the origin story to the vision and then where you are today. And you actually answered my next question already. So let me ask you that. So traditional markets actually rely on consolidated tapes, benchmark administrators, or reference data providers. And what is the crypto native equivalent of those layers, and how is Kaiko actually becoming that layer?
So this is exactly what we've built over the past 10 years for crypto as an asset class. I think we were the first ones to say, okay, we need to bring in all of the typical market data solutions of traditional finance. We need to apply that to cryptocurrency as an asset class. So we started by building our market data pipelines. Then we had crypto derivatives were launched, and we added obviously all of the coverage for crypto derivatives. And using both market data and crypto derivatives data, we've built our quantitative analytics division, building super important analytics such as liquidity metrics, risk metrics, implied vol surfaces, VAR models, all of the kind of risk management tools that are very important in order to invest in any asset class. Then the industry started becoming a little bit more sophisticated. We saw the emergence of regulated crypto derivatives and the launch of kind of ETPs and then later down ETFs in the US. Those businesses being regulated financial products require regulated data providers, benchmark administrators, and index providers. And so we've launched another business called Kaiko Indices, which is a fully regulated subsidiary of Kaiko, wholly owned by Kaiko, that leverages the market data business in order to create those regulated benchmarks and indices. And here we basically service all of the regulated financial products that are indexed on crypto and require an independent regulated third-party provider.
Yeah, I think I even met like the previous founder of the Kaiko Indices division once. So I was like super impressed that he also made the move, to move into that direction, which makes sense. Now, like institutions, or like when you are dealing with institutions, they often use only very few regulated venues to trade. While Kaiko, if I'm not mistaken, covers more than 99% of the global trading activity, and which is super impressive, by the way. But why is global market microstructure visibility essential for institutional to come actually on chain?
Yeah. So we have a lot of clients that actually buy, data on global coverage, even if they only execute on a couple of like regulated US crypto exchanges. And the reason for that is just monitoring global, markets, liquidity, understanding really like what is the organic demand for a specific token, what is the order book depth across Asian exchanges and European exchanges, and so having access because of the kind of unique fragmentation of crypto as a kind of the fragmentation of crypto exchanges, you have like dozens of places where you can trade Bitcoin dollar. It's the same Bitcoin, it's the same dollars, but there are many venues where you can trade that. So even if you just trade on Coinbase or Gemini or any US exchange, it's very important to know what is the market for the same pair on other exchanges, especially those large unregulated exchanges such as Binance that will derive a lot of the price action anyway. So Kaiko, we took the position of saying that we were going to cover all assets, all exchanges, all volume. We also work a lot with regulators and like public markets, and they need access to the data for law enforcement and market surveillance. And so being as exhaustive as possible is something we've always done and we will keep doing.
Yeah, and in my opinion, like the entire industry is moving more and more into that direction, that they also on the institutional level that they can and that they're allowed to engage with DeFi. Just look at Uniswap, for example. They make definitely the move into that direction. But maybe more a broader question. You've built like a lot of infrastructure around that so that TradFi can actually come into the market of digital assets. But what is, like, in your opinion, still missing so that TradFi can really truly move on chain?
So there's two things, and I would say that the first part is TradFi institutions looking at as crypto as this investable asset class, right? Wanting to deploy capital into the asset class, meaning invest in Bitcoin and Ethereum and other tokens. For institutions to be able to do that, they need high quality market data, and then they need the kind of execution part. We don't do execution, but we provide the market data. And as we just mentioned, global market data at scale, including risk metrics, which is very important, right? So that is more what is required for institutions to trade the asset class. And I think today we have, very, very good market data that is there. And I wouldn't call it missing today. Now there's the second part, which is all of the kind of tokenization, real world asset on chain move that is happening right now. And this is more about enabling institutions to leverage blockchain as a technology and enable them to basically run traditional financial applications on this new underlying blockchain rails. That has less to do with crypto beyond the fact that it is done on a blockchain, and more to do with what we said in the beginning about disintermediating workflow execution and making them more streamlined and automated. That is really interesting because if you think about it today, we have blockchain technology that works very well. We have smart contracts that we've proven with DeFi that smart contracts and blockchain can provide financial services such as lending and DEXs and all of the great things we have in DeFi. So blockchain works, smart contracts work. We now have tokenized securities that represent collateral, and we have regulated stablecoins, which represent the cash leg of a transaction. So we have pretty much everything we need to enable traditional financial application. Imagine, for example, collateral-based lending that will use tokenized collateral to lend in stablecoins. We have this. However, the part that is definitely missing today is data infrastructure. And this is why I'm so passionate about this, is once you have tokenized securities, the underlying price of those securities does not naturally live on chain. We're talking about traditional securities, and traditional securities market data is owned by large players, very well-established players such as Bloomberg. So here, what you need to do if you want to enable traditional financial applications on a blockchain is to bring the Bloomberg or NASDAQ or LSEG or whoever owns the data related to that said collateral or tokenized securities, you need to bring that on chain. And bringing that on chain is not trivial because the people who own the data have, IP considerations. They don't necessarily want their data to be published. So there's a whole privacy element that needs to be thought of. There's an accuracy and a timeliness element that needs to be really well thought of. So if you want to start enabling traditional financial applications on blockchain rails, you need to solve that data infrastructure layer in a way that preserves IP of the owner of the data and that guarantees accuracy and timeliness to the actual parties of the financial contract on chain. That is what I call data infrastructure, and that is what I think is largely missing to enable tokenized asset applications on chain.
Yeah, that's very interesting. So in terms of the infrastructure, and you also talked about the asset class, and we often hear you publicly arguing that we are currently in a shift or in a move from crypto as an asset class to blockchain as infrastructure. And do you see any current data signals supporting that transition? And what does it actually mean for the near future?
Yeah, I think the biggest signal of that transition is tokenization of real world assets. And as much as in the early years, there were a bunch of, proof of concepts of tokenization initiatives that were more like adding an extra tech layer on top of a traditional workflow. What we are seeing since the beginning of this year is more the native issuance on chain of tokenized securities, as in the chain is the ledger on which, that serves as a source of truth for the ownership of that security. And the purpose of issuing securities on chain is to do something with that tokenized security, right? It's not just for the sake of it. I don't believe that the tokenization of asset is really a distribution play for the issuers. I really think that the opportunity for capital markets lies into disintermediating contract execution. And so it is, what do you want to do with those assets once they have been tokenized on chain? And what do you want to enable with that collateral? Whether it's repo, whether it's collateral mobility, whether it's lending, those are the applications that matter. And I think this is the biggest signal that we are at that inflection point, is that we're starting to see repo transactions being done on chain and collateral-based lending being done on chain. And those are for me, the very strong signal that we have finally reached that inflection point in the maturity of leveraging blockchain as a technology.
Got it. That makes sense. In the beginning of the podcast, you mentioned you would like to dig a little bit more into explain why around the Bloomberg topic, and you started to talk about this, but curious to hear how Kaiko actually connects legacy financial data systems like Bloomberg with the blockchain rails, and why actually this interoperability is crucial for internet capital markets, and if there's a goal for Kaiko rather to become the Bloomberg of crypto, or if not, then why not?
So the big difference, so we're really, first of all, we don't have a terminal or a media business. We really don't do, front end and UI for users to view. We really are more into kind of the back end, providing actual crypto data or data plumbing. I like to call myself a plumber, and I think it defines very nicely what we do. So to give an example, we are supplying Bloomberg with crypto data that they then integrate onto the terminal and display to their users. And we've been partners with Bloomberg on data and data infrastructure around crypto assets for many years now. So this is clearly a key differentiator. We are more of a kind of supplier on the crypto side to Bloomberg rather than a Bloomberg. Now, on the other way around, what we aim to do in the future is not to become Bloomberg in the sense that we do not aim to own equities and fixed income and rates data and all of that data. What we want to do is to enable Bloomberg to service their existing client base using Kaiko's blockchain rails. And that's not just Bloomberg. That would be any data owner, any third party that would want to provide their data to their clients on a blockchain could do that using essentially our plumbing, right? Bridging basically the market data owners of traditional financial assets with smart contract execution.
So we talked a lot about like data plumbing, and that you are also excited about like the data infrastructure part here. So shifting gears now a little bit, are there like any other developments at the moment in crypto or the broader protocol ecosystem that you are like super excited about? We know, for example, that Kaiko is also involved in the Canton network as a super validator, right? So maybe there are like some more of those projects that you are personally excited about.
Absolutely. I mean, you are faster than me in bringing up Canton. You asked what are the other aspects of the blockchain developments I'm very excited about. I was going to go with privacy, and then I was going to obviously bring up Canton. I think privacy is a critical component to enable any sort of traditional financial applications on chain. The ethos behind cryptocurrency, where everything is public, has its limitation and will not fly well with capital markets, and let alone even individuals, people. I mean, I wouldn't want my bank account to be public, period. I don't want people to see all my transactions. It's fine when it's just crypto transfers and buying NFTs or whatnot, but on a daily basis, no way. And so I think the privacy topic is really much, very much back in focus this year. Canton is a perfect example of why privacy matters so much to financial institutions. And it is also very interesting from a data standpoint. Why? Canton is a network that, is a kind of privacy-first network, meaning that the users can select the level of privacy that they want and selects what kind of information they want to reveal and not reveal. And so it makes it, the fact that it's by default private and then you show the data to who you want is important from a financial application standpoint, but is also very important from a data infrastructure standpoint. When we work with data owners, they do not want the data that they sell to their client to be published on the network. So Canton made it a very, very natural network on which to build data infrastructure, meaning onboarding of third-party data, distribution of data as it's being generated on the network, and then providing all sorts of kind of pricing services and being independent calculation agent for users of the network. And that privacy element is absolutely critical in enabling traditional financial applications. And this is why we've kind of focused so much of our development this year to build data applications on that network.
Yeah.
Very interesting.
Go ahead. Sorry.
Yeah. No, it's really, really interesting what's happening there and how many players are actually already adopting it. Yeah, it's time for our quickfire already. And let's change gears a little bit. And we will ask you one question. You have one word to answer.
Oof.
Are you ready?
I hope so.
All right, let's go. The most overrated narrative in crypto markets right now.
Overrated?
Overrated.
Oh my God, and this is live. I have no clue. I need to think about these things. It's a hard one.
We can shift it to the end. The most underrated metric you track at Kaiko.
Organic market depth.
Nice.
Sorry, it's a few words, but it's I think market cap. Okay, going back to the first question, the most overrated market cap, underrated.
The most overrated narrative in crypto markets right now.
Overrated. Market cap.
All right. One geography everyone is underestimating in digital assets.
Japan.
Mhm. One thing traditional finance does better than crypto today.
Data.
One thing crypto does better than traditional finance today.
Smart contracts.
AI plus blockchain in one word.
Crypto.
All right. Now, one sentence for you. How will internet capital markets look like by 2030?
All disintermediated workflow execution, smart contracts, issuance, and streamlined execution.
Great.
Super. That was like a lot of fun. We try to keep that like to 30 minutes, so we are almost at time. But before we wrap it up here, where can people find more about you? Where can they find you on the internet? And who should we talk to next on our next show?
So LinkedIn, Twitter, follow us, email us if you're interested in anything. Happy to chat always. And who should you have on your next show? Maybe somebody from Canton.
Okay, that's a good one.
Great. Thank you so much, Ambre. That wraps up this week's episode of Internet Capital Markets. A huge thank you to Ambre for joining us today and sharing her insights and what it means for founders, investors, and institutions navigating this chapter. If you enjoyed today's discussion, make sure to subscribe, rate, and share the show. It helps us to bring more conversations like this to the people that want to be part of that. This is Internet Capital Markets. Please join us next week. Until then, stay curious, stay connected, and keep building the future of finance. Bye-bye.